Right now, roughly 40% of all human financial advisors are heading for the retirement exit. In their place, a $300 billion generative AI wealth management market is stepping in to take control of the assets. These automated systems provide everyday retail investors with the hyper-personalized, rapid-fire portfolio management previously reserved for elite Wall Street hedge funds. But handing your life savings over to an autonomous bot raises an immediate question. Is this a true democratization of wealth, or a high-tech trap waiting to spring when the market turns? To survive the financial markets of 2026, you have to identify exactly who or what is making the decisions behind the screen. This chart shows a head-to-head performance test. On the top, we have a traditional human advisor. On the bottom, a 2026 AI trading agent. We are tracking both over a simulated timeline of extreme market volatility. For anyone holding stocks or crypto, the stakes are simple. When the inevitable crash hits, which of these two strategies will actually protect your portfolio? The agent in this test represents a new class of agentic systems, moving beyond the static robo-advisors of the last decade to handle multi-step reasoning and autonomous execution. Running this simulation exposes the specific vulnerabilities of relying entirely on a pure human strategy, or entirely on a pure machine strategy. In the opening weeks of the simulation, the AI takes an early lead. It accurately predicts a sudden revenue surge for a major tech firm, positioning the portfolio weeks before the official quarterly earnings are even published. It achieves this by bypassing traditional financial statements and analyzing alternative data. The agent scrapes TikTok trends for brand momentum, monitors IoT sensors in supply chain warehouses, and calculates retail demand using satellite imagery of mall parking lots. This diagram illustrates the processing logic, a system called deep reinforcement learning. Instead of following fixed rules, the digital node navigates shifting financial pathways through instant trial and error, optimizing for the highest long-term reward. As market conditions fluctuate, the algorithm dynamically rewrites its own trading policy. These self-correcting architectures proved their power in the ancient game of Go before being applied to the stock market. This ability to sense physical, real-world economic activity allows the AI to react to shifts before a human analyst can process a single spreadsheet. This diagram shows how the system structures the chaos of high-frequency trading data using transformer architectures. We see the system's self-attention mechanism taking thousands of scattered price points, volume spikes, and news feeds, and organizing them into a clear sequence. The transformer analyzes these market microstructures the same way a large language model reads a paragraph of text. It weighs the importance of every data point against all the others to find hidden context within the noise. At the institutional level, this analysis is fed into hybrid quantum classical execution pipelines, which process data using quantum states to optimize portfolio allocations instantly. The resulting execution speed is 5.3 milliseconds. In the time it takes a human eye to blink, the AI has already digested global market sentiment, recognized a profitable pattern, and repositioned the portfolio. Then, a simulated black swan event hits the timeline. A sudden, massive geopolitical shock strikes the market, testing the limits of the leading AI. This exposes a critical flaw: model uniformity. Dozens of isolated AI nodes flash red, converging on the same downward path. Because major institutions rely on identical foundational models, they sell at the exact same millisecond, triggering a synchronized flash crash that wipes out liquidity. The automated agent fails the stress test. It executes its fire sale purely on mathematical risk metrics, lacking the emotional context or historical perspective required to understand human panic. These agents create severe systemic fragility the moment they begin acting as a herd. Meanwhile, the human advisor steps into the simulation to salvage the crashing portfolio, contrasting human intervention against machine execution. The human's immediate and most vital action is stopping the client from panic selling their life savings at 3 a.m. While the AI sees only a declining numerical value, the human weighs the crash against complex life goals. They factor in the tax implications of a sale, the structure of a family inheritance, and long-term real estate plans. The human factor provides the emotional discipline and long-term vision required to hold firm and look for value while the market is in freefall. The machine understands the data, but only the human understands the actual context of the client's life. The experiment identifies a specific winner, the synthesis of both human and machine strategies. This diagram maps out the 2026 industry standard, the cyborg portfolio. It represents hybrid intelligence, merging algorithmic precision with human strategic vision. In this hybrid setup, the AI handles the what and the when. It constantly monitors the market, executing hyper-personalized portfolio rebalancing and automated tax loss harvesting. The human advisor answers the why. They manage the overarching financial strategy, navigate complex ethical decisions, and provide the emotional regulation needed during volatility. This partnership upgrades the financial advisor into a strategic co-pilot, using automation to handle data while humans provide the oversight. If you are managing your own retail investments or trading crypto at home, this simulation provides a direct, actionable blueprint. Use these algorithmic tools to process massive amounts of market data and execute your trades with maximum efficiency. However, keep control of your overarching financial strategy and your emotional discipline rather than outsourcing them to an autonomous bot. In a complex market saturated by automated algorithms and blinding quantum speeds, human judgment remains the ultimate alpha.